In this video, I'm going to break down the strategy that's gotten me funded with 4 Topstep accounts over the last month. I'm going to throw TradingView in replay mode, scroll back in time randomly. We'll backtest this. I'll explain what I'm doing and why. Let's go ahead and throw TradingView in replay mode here. I'll also comment, I'm not a fan of no strips, but as you might be able to tell, I'm sick. It's the 4th of July. Rather than celebrating, eating hot dogs and hamburgers, I am here with you guys backtesting. So I'm going to go, I'm on the 1-minute chart here. This is ES futures. This is what I like to trade for NYSE Open. I'm going to select the first available day and see what happens here if I start to play this forward. Cool. So great. Let's get to the 30-minute chart. Let's go ahead and throw, we're at Sunday. Let's throw a line so we know when NYSE Open is. This is exactly how I mark my charts. I'll explain the tools I'm using and really how I go about trading this. But I'm going to get the first day set up. Let's play this chart forward. Boom. Okay. That was a little bit too far. When I drop to the 1 minute, that's going to be too far forward. So let's get down to the 1 minute. I'll show you how I mark my chart up. And we'll get some back testing in. We'll take some wins. We'll take some losses. You guys will see this thing in real time. So now that I got this marked out, first thing I like to do is mark off a pre-market high and low. Outside of the vertical bar I use for 9:30 a.m. Eastern, which is New York Stock Exchange Open. I'm going to mark out a pre-market high, which is the area that price has traded in pre-market from the open of that day, right? So if you look down here, this is the start of Monday, right? And this is all the way to 9:30 a.m. Eastern. So what's the highest area that price has traded from that time? We're going to mark this level off right here. That's going to be our pre-market high. And this is going to be our pre-market low. I like to mark a prior day high and low as well. I'll do that on the next day that we get because I can't scroll any farther back in time. This is where TradingView locks me out, even with the highest paid program. So what I like to see outside of looking at the higher time frame trend, which I also can't do because we're on the 1 minute here, scrolled as far back as we possibly can. I like to take a look at the higher time frame trend, look at market structure. Are we in a ripping uptrend like we've been in the US markets? Are we on a trend down? Are we consolidating? That'll help me frame a little bit of a bias, but what I've been finding honestly recently, I don't really like to take too much bias into the day. I like to mark my chart like this, come in fresh right before that 9:30 open, take a look what's going on in pre-market. Right now, I see a lot of consolidation, right? I can't tell if we've been coming off a high or coming off from a low, so let's just trade this one as is. Consolidating quite a bit. I like to trade aggressively off of these pre-market high and pre-market low levels. I like to use prior day high, prior day low, sometimes a volume point of control. We'll do that for the next session as well. This is a VWAP, volume weighted average price. Very helpful. It's for the session. This is just the standard indicator. Then down here, I've got standard volume as well, just our regular vertical plotted volume. So I'm going to use these for this first day. I'm going to look to take trades based on market structure and price action, how it's reacting around these levels. Are we aggressively breaking out down past the pre-market low? Maybe we're going to look for sells. We come down to the pre-market low, start to react on a candle or two. Maybe we're going to look for a buy back up to the VWAP or maybe the pre-market high. So I'll play this forward. I'm going to go ahead and use just the buy and sell buttons here on replay mode. I'm aware that I can only enter on candle closures, which is not like live market conditions. I'm also aware that when a stop loss or take profit triggers, it is not exact to where you have the line. So we're opening up below the VWAP here so far, right? Here's what I'm looking at. A little bit of consolidation. I don't really have a clear direction based on this. We're opening up bearish. We're below the VWAP. It looks like we may come down towards pre-market low. I'm not going to take any trades yet. I'm going to wait for the first few minutes to play out. Once we get to 9:45, I will also mark the opening range, the 15-minute opening range, high and low. So we're trending down, nothing crazy just yet. Coming up on that 9:45 time frame, let's go ahead and mark out an opening range, high and low. I will use these bars right here. And again, this is the area that price has traded within the first 15 minutes of the open. We understand what's going on here, right? 9:30 a.m. to 9:45 a.m. First 15 minutes. Here's the high area that it traded. Here's the low area that it traded. Same thing, looking at this as a range, as levels that I may pay attention to. If price starts to get above them, how does it react? What does market structure and price action look like? Price starts to get below it. Nothing magical here. This is the same stuff you see a lot of the larger future traders use because it works. So breaking out down past that, looks like we're going to head towards pre-market low, or at least test the low of this range. This isn't giving me a trade yet, right? I don't have anything really to trade off of until we get down to this level here or up to this level here and I see some kind of a reaction. So that's what I'm waiting on. Okay, so we tested VWAP. We're looking bearish overall. I don't know that I'm taking an aggressive sell right off the first test of this area. I'm going to wait to see if we start blasting through this or if we start to come off of it. Maybe we do look for a sell. Test it again. We're at it a third time, kind of consolidating there. This looks like it wants to push through. Okay, long wick to the upside and a push through. Let's go ahead and take a buy. Maybe we would have gotten entry down here if this was live market conditions. And we're going to go ahead and target this area. I'm going to set a stop loss for these trades. I'm not going to set a take profit. I will manage it based on how I see fit. Let's go ahead and say, we'll give ourselves that, let's say like $600 to $800 risk per trade. Let's just use that as our risk parameters. Allow us to scale into and out of positions if we want and manage it. Again, no magic strategy here. No, super high win rate. We'll take losses with this. The game plan will be to keep our winners slightly larger than our losses and try not to rack up a ton of losses if at all possible. So pulled back down into the range, pulled back down to the VWAP. This still looks okay. Discretionary trade management. I'm going to scale in and out of positions as I see fit. I'm not going to hold them all the way to a certain take profit. I don't even have set on here or a certain stop loss. Right now, I'm just watching this structure. This still looks good. Potential target is this pre-market high, but we're in the money. Not really enough for me to move stop loss to break even yet. Would like to at least see a 1-to-1 before we go ahead and do that. Coming up on it. Let's go ahead and take one off there. Secured $325 of profit. At this point, we can go stop loss to break even, a little bit past, and I will go ahead and set a profit right up here for the remaining position. That's what I'm looking for. Let's go ahead and play it forward, see if we get stopped out. Nice, take profit hit. Let's break down this trade. Again, very simply. Waited for market to open. We opened up a little bit bearish. We didn't jump right in, didn't do anything crazy in the first, 2 minutes of the open. I watched it come up to VWAP here and initially was looking for a short, maybe down to pre-market low, It didn't react here really aggressively and give me a short entry. It gave me a long entry because we blasted through the VWAP. We're showing a nice shift now, right? We came down, put the opening range low in, didn't even test the pre-market low, started to form bullish price action. We got a nice retest, brought us into a little bit of drawdown, but what happened? We reacted right here at the VWAP line, and we continued higher all the way up to pre-market high. Scaled out, and then scaled out of the second one. Could I have left a runner on? Sure. Maybe on another day, we're going to secure, a whole lot more profit than a little bit more than what we had on for risk, right? We had $600 of risk. Worst case scenario, it blasts right to our stop loss. You'll see some of those trades. For the most part, I'm going to have that stop loss at an area of invalidation. But if I see the trade starting to not work out, I'll cut that trade short. I'll cut the loser short. No problem doing that. So we got a winner. We're at 11:30 here. Let's go ahead and play this. We can play this a little bit more forward just to see what happens, see if it takes off and runs. Kind of consolidates, gets a little bit choppy. Looks like this might be a runner. Leaving a trade on, leaving one position on could have worked out really well. That's fine. Trade management's going to be discretionary for me. For the most part, I'm not looking to hit a home run on every single trade. Past a 1-to-1 is great with a little over a 50% win rate. We're making money. So let's go ahead and remove drawings. Let's jump back out to the 30-minute. Let's get over to Tuesday, and we'll just play this forward. We'll get a couple days of trading in here. and I'll let you guys see how this works out. Again, explaining what I'm doing as I'm doing it. And simple market structure, price action, horizontal levels, a little bit of volume, a little bit of VWAP. Let's go ahead and use prior day high and low on this. So if I look at the day, boom, prior day high, prior day low. Let's go ahead and jump back down to the 15 minutes so we can play this forward. We'll get pre-market high, pre-market low, and maybe I'll show you guys how I get a volume point of control as well. Yeah, let's do volume point of control. So what I like to see is what I like to use is the fixed range volume profile right here. I will drag it on the chart. This is just a drawing tool. It's not like an indicator from the indicators section. For Monday, at the start of Monday's open, which would be Sunday night, all the way to Monday at market close, right here. That's going to give us a volume point of control. Let's throw a line there. We'll make it a different color so we know we got a volume point of control. What this is plotting a horizontal volume profile for the range, the price range that we designate by dragging this tool. You can see if I drag it way back here, it changes, right? What I've got going on here is this is the area of highest volume traded for this session. It's called the point of control. I'm going to leave it at that. It's an area of interest that I like to pay attention to for the prior session. This is yesterday's volume point of control. So let's go ahead and mark out. Let's get back down to the 1 minute. Let's go ahead and play it forward a little bit further. And we'll mark out pre-market high and low. So again, we got prior day high and low marked. Let's mark pre-market high and low. Here's Tuesday, right? Now we're back into Monday. If you look down on the bottom here, this is what I'm looking at. Here's the high so far traded for the pre-market session. We'll make these purple. As you can see from my chart, I'm not a big fan of a bunch of stuff with a bunch of different colors, but for the purposes of this video, volume point of control is going to be this blue color, dotted line. Pre-market high and low is going to be purple. Prior day high and low is going to be gray. And then we'll mark off opening range with a gray dotted line. So same deal. Let's go ahead and play this thing forward. Consolidating, right? We came up, tested. We've sold off in pre-market. We're below VWAP line, somewhat similar, right, to yesterday. Let's go ahead and see what happens. Let's watch price action and market structure form. Let's try to trade along with the trend. Okay, so we opened up very bearish, came right down and broke down below the pre-market low. I'm not jumping in for a buy or sell here just yet. I'm going to wait to see what happens. And I don't wait for a specific confirmation. I don't wait. Excuse me, guys. Yeah. Sorry about that. We're going to keep this show rolling. I don't wait for a specific candlestick, a specific chart pattern, a confirmation. It's discretionary, right? I'm using my intuition. I'm going to try to describe what I'm seeing here, my discernment of price action, if you will, what I'm seeing and why I'm going to enter and exit. It's going to be different every day. It's going to be different for everybody. There's some consistency here, but it's built from intuition and experience. So, take that into consideration. So we broke down below. Now we kind of stalled here, right? High wick to the upside. We got a close below, but we're not blasting off so far. So now we're kind of catching it as support. Again, we're pretty early on in the open. I really don't like to jump in on the first one or two candles. That's kind of not a rule for myself, but a guardrail. Price gets wild, right? A lot of volume and volatility comes in. Look at the volume down here. This is pre-market. Look at NYSE open. Ton of volume comes in. Same thing every day. Does it mean price is going to go crazy and do something wild? No. But if you go back through and you back test with this, you'll see the open can be pretty volatile. It doesn't give you a whole bunch of clear direction on the first candle. At least that's my opinion. So now we've, we're still kind of consolidating here. Looks like it wants to break down. I don't have enough I don't have anything telling me to take a sell. Had we had one of these candles break down below here, I'd probably get into a sell with a stop loss somewhere up here. I'm still waiting to see if we pop back up to VWAP line. Overall, this is looking bearish. We're following this market structure here, right? Which way is price headed, guys? Down. If you said up, you were wrong. That's the most recent 1 minute price action and market structure that I'm looking at. We're breaking below pre-market low, staying below the VWAP line. All right, it's looking weak. I'm going to go ahead and take a sell here. I'm going to show you guys one more tool while we're waiting here. Anchored VWAP. I use these throughout the day. I wasn't sure if I was going to talk about it in this video, but I'll go ahead and talk about it. Anchored VWAP is another drawing tool. It's an anchored volume-weighted average price. This is where you pick a point on the chart to anchor a VWAP. That's the starting point, and as price prints, it creates that line. This can be useful in a number of different cases. The way that I like to use it is I'll typically anchor one off of NYSE session open. I'll anchor them off of the highs and lows of moves. So if we get a low down here, I see price start to move up, I'll anchor one off of the bottom. This is used as, again, a dynamic support and resistance type of a line. Similar to the session VWAP, it can be used to show who's in control, right? If we have a low put in, we anchor a VWAP to that low as price starts to print. So long as price stays above that anchored VWAP, the theory is buyers are in control. That can be used, again, as a dynamic support and resistance, an indication of direction, help you manage your trades, help you manage risk. Something that can, that can be used pretty simply. I like it. Again, you want to use something else, that's fine. I don't think there's anything wrong with picking a different tool. You want to use a moving average, something like that, that's fine. So again, instead of taking a sell, let's go ahead and throw a let's go ahead and throw a pretty wide stop loss on this one. I'm going to leave one contract on for this. I think there's potential. I'm going to go way up here. If this starts to move in the direction of my trade, maybe I'll scale in higher. Starts to move against me, I want room to cut this before it gets to my stop loss potentially. But I'm not confident enough in this price action to throw a stop loss right here with two contracts. So that's the discretionary side of this. So let's see if we do break down or if we need to come back up. Nice. So we're breaking down. This looks pretty good. I'm going to go ahead and scale into a second position, and I'm going to manage risk by bringing my stop loss down. Now, I won't survive a crack back up to this level, but I'm going to look for a quick continuation down. This looks very bearish. If it wanted to pull back up, it had some opportunity to. Let's see how that plays for me. Very nice so far. Boom. Perfect deal. Let's say I go ahead and I close out the position there. $1,100 in profit on this trade. Probably would have cut it somewhere right down here as we were approaching this. Worked out very simply, guys. Two winners. Doesn't always play out that way. But again, explaining what I did on that trade. Reading price action and market structure. Watching this level, not jumping in too early. Price is breaking down below. Consecutive closes below. Looks like it's getting weaker and weaker. I sold here. Didn't jump in too heavy, right? The first position I took on yesterday, two contracts. On this one, I ran a wider stop loss and I ran one contract because my intuition, my experience is telling me, hey, man, there's potential for this to wick back up here pretty quickly. It'll take you out if you throw a stop loss here before you really have a big move to the downside. We started to get that breakdown. What did I do? Scaled into the winning position. I'll scale in and out of positions multiple different ways. Scaled into the winning position, move stop loss down, controlled risk, right? We were able to increase our size, increase our potential for gain, and continue to control risk by moving the stop loss much tighter. On another day, maybe that doesn't work out like that. Maybe I do get a wick up and I get taken out. Maybe this position just fails. Today it worked out. That's the name of the game. Let's see. This looks like it's going to sell off. Maybe we'll take a second trade here. For me, that's enough of a winner. Almost a 2-to-1. I'm cool taking my win on that and just calling it a day. Let's see. So we could see how this level came into play, right? Prior day low. Not magic that price stopped right here and right here, right? We could see how these levels are respected as support and resistance, supply and demand, order blocks, whatever the hell you want to call it. Maybe we look for a re-entry on a sell if this is looking really, really weak, which it is. got to pull back up. You can see this is our New York anchored VWAP. This is our session VWAP. This is our pre-market low. Let's see what we get from here. I'm not confident in this breaking down just yet. We've got, a higher low put in, some bullish structure forming, at least on the 1 minute. Overall, we're still looking bearish. I'm not looking for buys just yet, but I'm not convinced that this is just going to sell off and rip to the downside. Right now, it looks like it wants to climb back up into the range. Let's see what happens at pre-market low and session VWAP. Breaking above it. Buyers showing they're in control. Really tight trending price action like this type of market structure can be difficult for me to get a trade on. I tend to get left in the dust like I'm doing right now. You could throw a trade on quick here, like this is telling me, hey, we're looking to go higher. The difficulty is stop loss management. I'll show you what I mean. Just for example, I probably wouldn't have a trade here, but let's say, direction wise, this looks good, right? We're breaking now above NYSE's anchored VWAP. We're breaking above session VWAP. We've broken above pre-market low, right? We're coming back into the zone. Maybe we target this volume point of control. The issue for me is stop loss placement. Where do I place a stop loss that tells me this trade is no longer valid? Well, I think it can pull all the way back down here so long as it doesn't get below this low before continuing up. I'd have to say if I'm going to look for a trade and structure it by risk, that's pretty much the maximum. We said $600 to $800. If I'm going to get a positive risk to reward coming up here, somewhere that looks reasonable, that's about where I would go. Let's go ahead and see how this works. Maybe we'll manage it similarly. We'll scale in. I'd probably be looking to go stop loss to break even right around here. And maybe we get stop to break even. Looks like it. Cool. Stop to break even. Small bit of profit. Let's see if this does continue up. Nope. Back down. Kind of just consolidating back up into the range, chopping around. So, maybe you got long down here. You said, hey, look, we got a break, retest. We got nice bullish structure forming. After this type of bearish structure, I'm not as quick to flip. Right around here is the area that I'm looking. But again, on price action, on market structure like this, I find it a little bit more difficult to find a clear invalidation point. Okay, so $1,100, $1,125 on the day, 700 something on the prior day. Let's get one more day in, and we will call this a session, man. Again, I'm doing this without editing it, just as one clip, so you can see that I'm not skipping ahead. I don't know what's coming next. I'm showing you guys literally exactly how I approach the market. There's a couple of the tools I do use. A little bit more volume tools, a little bit of Bookmap recently. Got set up with Bookmap this week. That has been just an absolute cheat code. A way to see liquidity in the market, a way to read depth of market, the order book in a really, really intuitive, nicely displayed way. I shouldn't have came this far forward if I'm going to use the prior day. But let's go ahead and just do this on the 1 minute here, guys, so we don't... here, 5 minute. So we got pre-market high. We got pre-market low. Looks like we had some news here at 8:30, something along those lines. Yeah, 8:30. We got pre-market low, right? We're looking at Wednesday, area that price is traded so far for Wednesday. Right here is the low, right? Because if you see down here, we're on Wednesday, Wednesday, June 12th. We got a pre-market high right about there. Let's get prior day high and low in gray. We're going to look at Tuesday. This is the high for Tuesday. We're already above it. And the low for Tuesday. Boom. Let's get a volume. Remember, we're dragging from the Tuesday session. So Monday evening all the way to Tuesday close. right there. Volume point of control. Nice. I recognize that I did not mark opening range on the last day. I do like it. I like to mark it up. If I'm in a trade, if I got stuff running, I'm reading it without it. You know, sometimes I'll go ahead and work without it. So where are we at today? Big news spike up, right? We trailed up in the overnight session, right? Here was the close. It's designated by VWAP switching over. Here was Tuesday's close. Here was the open for what I would call the beginning of Wednesday's session. It's Tuesday night, 6 o'clock p.m. Eastern. Trailed up, and then we had a big news spike to the upside. Reading this market structure, a couple things are obviously possible. Let's not go through every one. Let's just start to play it forward and make a decision as we see fit. So we started to sell off a little bit. Let's see if we start to get bullish and break above this this pre-market high. Maybe we'll look to get long. Yeah, so this looks very strong. We didn't get a pullback into, you know, what I would call an imbalance here, a gap. Just not the fancy smart money ICT way of talking about it. Just a general imbalance between buyers and sellers that created a big impulsive move. A lot of times, the price likes to trade back into that. Testing the VWAP line before kicking off to the upside would have given me a little bit more indication. But let's go ahead and say we're going to get long pretty quickly on this one. We're going to go ahead and buy now. We're going to get a stop loss down below these lows. We won't survive a test of the VWAP. We won't survive any pullback into this area. But if we're going to catch the nice move to the upside, this looks like it. So there's a little bit more of a breakout trade, a little bit more aggressive. But again, let's go ahead and trade this how I might normally trade. So we continue to push up, retest it a bit. We've got a little bit of structure, right? We could come all the way up here. We could scale in, come all the way up here with a stop loss. Just need another pop to take the trade. But we'll go ahead and manage this. You know, it starts to come back against us. We don't have to hold it all the way to a stop loss. But let's see if we run. You know what? Let's go ahead and scale in. Let's get aggressive with it. Let's go ahead and manage our risk. We actually reduced risk, right? So I had higher than the amount of this on. I've added in profit. Now I've tightened up the stop loss really tight. I won't survive much of a pullback, but we get a quick impulsive move to the upside. I'm able to close out and call this one a day. I really don't want to see it come all the way back in. That's the discretion, right? I'm reading market structure and price action. It's a bunch of if-then questions. We're not trying to predict what's going to happen. We're structuring our risk and saying, this has happened so far. This is all, you know, what we're seeing in real time on this candle and historical data. Based on this, here's how I want to structure my trade. So let's go ahead and see. Maybe we'll take an L on this one. Looks like it. We don't pop up quickly. I think it's much more likely to come down and take us out for a loss. Let's see. There we go. Nice pop up. At this point, I'm going to go stop loss to break even. Risk-free trade. I'd like to be able to see the profit there. We're at 537 here, so we're past we're not past a 1-to-1, but we're about out at a 1-to-1. Okay, let's go ahead and scale out of one position there. Secure about $400 of profit. See if we can leave a runner on here, maybe catch a nice part of a trending move. Look at that. So $400 secured on the first trade. Now we're up $656. Again, we only had $600, if I'm remembering correctly, risk on the first position. When I scaled in, I actually reduced that risk. This is turning into a nice winner. Very, very nice. You know, you could manage your trade a bunch of different ways, right? Some guys trail stops very tightly as they get into profit. Some let it run to a take profit, to a stop loss. I manage mine pretty flexibly. I like to scale in to winners if I can, or even a little bit of a dollar cost average move, a scale into a losing position, but not by much, right? It really got to show me that the trade idea is working out and give me a reason to want to increase position size. But I manage my trades with that flexibility. It's more difficult to do. This is not really great for beginners. It takes that intuition and experience, and you're messing with the trade, right? You're inputting, changes into the trade. You'll be wrong sometimes, and that's hard on your psychology, on your mindset, right? When you maybe scale in, tighten up a stop loss, it takes you out and then blasts up for 30 points. That's hard. I accept those days, which will inevitably come. I'm not right on every day, because I know in the long run, my management, my adding to winners, my scaling out, my cutting losers short will net me a greater P&L, and I can take the losses, sometimes consecutive, sometimes with my input, that had I not touched that at all, that trade would have been a winner, because I know in the long run it works out for me. And I believe it can work out for most guys if you build that experience through screen time, through trading. You don't have to do anything crazy. You don't have to pay for a special course to read any one single special book. I think getting help and working with the right people can certainly be helpful. Okay, so looks like it's coming back down to stop us at break even. I'll leave this as is for right now. Back up. There we go. Stop to break even. So one winner. The second we let run, looking for this to be a really, really large trend day, and stop to break even. Could have, and this is probably where I would have closed the trade had I not had that stop where it was. It was a little bit higher than the actual break even position. As we started to form this structure to the downside, this is not looking as good. Can it blast up from here? Certainly, right? This is still looking fairly bullish, but we made it a risk-free trade. We didn't want a winner to turn completely into a loser. If we can avoid that, let's see what would happen, right? Let's just play it forward. Take this into consideration. Kind of consolidates. We would have been stuck in this trade for a long period of time. Again, my second stop loss was down here. Let's see if we would have been stopped or if this does just rip into profit. Looks like it would have gotten really close right there and consolidated all the way into the afternoon. Boom, and then stopped us out right here. So we managed the trade well. This trade management worked out very well. We were able to scale in, secure some profit, take a stop loss, in profit really, a break-even stop loss, and and secure some profits on the day. Go ahead and stop sharing. We'll wrap this one up, guys. The point of this is not to display some master skill of trading or some magic combination of indicators. As you can see, I'm pretty much using a raw price chart there, right? The only thing that I really have on there that's an indicator is the VWAP, and it's more of a horizontally plotted volume tool that I like to use. What I use to get this done over 3 days: market structure and price action, reading the trend. Are we making higher highs and higher lows, lower lows, and lower highs? Are we consolidating? Price action. What happens when we get to a level? Are we blasting through it? Like we saw coming up through the VWAP, and it's about time to get long. Are we consolidating here at a level, and now we want to take it in the opposite direction? Just utilizing that experience that you get from staring at the charts day after day, doing this stuff. Using a couple of basic tools, VWAP lines, maybe anchored VWAP. Using levels that make sense. Do you have to use pre-market high and pre-market low? No. You can use a different opening range, 30-minute, 1 hour, initial balance. You could use VWAP. Again, you don't have to use VWAP. Maybe it's a moving average or two that work for you. I don't believe there's one right way to do this or a wrong way to do this. I think keeping things as simple as possible, utilizing your experience and intuition, utilizing your discretion, right? Having some guidelines for sure, and having strict risk management. Right off the bat, I said, hey, I'm not going to put on more than $600 or $800. A little bit of flexibility there for myself, but I told myself I wasn't going to put on more than that, and I'm going to control risk as I'm adding into a position. How I'm going to manage my trades. Is there flexibility for myself? Yes. Do I have rules-based system of how I'm going to do that? If this happens, objective rules? No, I don't. But I apply some consistency every day. I'm not doing one thing and then a complete other thing the next day. You can, it's my opinion, that you can make money in the markets by keeping things relatively simple, finding tools that you can use on your chart that allow you to make educated trading decisions and allow you to structure risk, and by having a strict risk management plan or approach and applying that consistency, you can make money in the markets. Is it going to work out like that every time? No, that's actually uncommon that I would get that many winners in a row without taking any losses or having trades move against me. I'm glad we took one break-even stop out there. With this approach, I'll end up with a little bit more than a 50%. I usually say a 50% win rate. I've been ending up on average with a little bit higher than a 50% win rate, but let's say it's 50%. With that, my winners are going to be a little bit bigger than my losers. Are they going to be a 10-1 or a 5-1 or even a 4-1 on average? No, they're not. They're just going to be a little bit bigger, and I'm going to run a little bit of a positive win rate. And that's enough with having that understanding and knowing you're going to take consecutive losses and be able to trade through that. That's enough to make money in the markets. If you're trading Topstep accounts like I was talking about, or a different funded account, you're just going to have to custom tailor your risk management approach, right? Go through the numbers, understand, hey, I'm not going to be able to take a whole lot of $600 or $800 losses before I blow the account. In fact, I'm only going to be able to take 2 or 3 before I hit a daily loss limit, maybe 3 or 4 before I hit a max loss limit. Custom tailor that, right? You could trade the same way on micros. You could use a few micros if you want. You could trade that much larger size. Understand your risk management and how it's going to relate to your win rate and your risk to reward. How many losses are you going to be able to survive before you really run into a problem and before your psychology just gets out of whack? But point of this video is to show you guys how I approach NYSE Open trading on ES on the 1-minute chart. A couple tools there. Again, I use some other things. I use Bookmap. I use other horizontal volume tools. I use anchored VWAPs a little bit more than I was doing in this video, but in the interest of keeping things very simple and just giving you guys the basics of this approach and how it can work out very, very simply. Nothing crazy complicated, no fancy indicators, no 37 confluences before we enter, checking, correlation between pairs, just simple price action, market structure, horizontal levels, you can call them support and resistance, a little bit of volume tools. You add Bookmap in there, like I have this last week. Got some juice, man. Anyway, guys, thanks for watching. Quick disclaimer, I'm not a financial advisor. Nothing you see here or anywhere else that I do is financial advice. I'm just an idiot on YouTube talking about how I like to watch these candlesticks and click the buy and sell button. Trading's risky. Most traders lose money. Most guys do not pass prop firm challenges. Most guys lose all or more of the money that they trade with. So take that in consideration. Read the full disclaimer in the description of this video and on my site, realdealfutures.com. If you guys want to get involved, watch more of this stuff, I got a free Discord. Hop in the free Discord. I trade live every day on YouTube here, almost every day. Hop in the free Discord. You can ask me questions. I talk about everything that goes into the trading this way. I talk about news, things that are going to impact the market. I share analysis before NYSE Open, and I'm typically trading around that 1 p.m. Eastern for the afternoon on ES. Really right from a Topstep Combine. That's what I've been doing on Topstep X. It's the platform that I use. You can watch me take wins, take losses, go through everything that goes into profitable trading. Ask me questions, and I'll keep it real with you guys. Thanks for being here. If you watched this long, I really appreciate it. If you like the video, feel free to like it. Feel free to subscribe. If not, it's free, man. I'm not going to ask you to do anything, but I appreciate the support if you feel like giving it. Thanks, guys. I'll talk to you in Discord.